Hi there everybody, welcome to this pre-scene analysis. This is only part 1 of your pre-scene that I'm introducing for you. Just to let you know that the pre-scene is going to be given to you in 2 ways. The pre-scene is given to you as a video that you're watching, plus it's going to be given to you as a PDF file which you'll find below the video section itself. You'll find a pre-scene PDF. What I want you to do is very carefully listen to my explanations. I have not missed anything, I can guarantee that to you. So first 1 or 2 times I will ask you to view the entire pre-scene as a video explanation. From the 3rd time onwards, I want you to read the PDF. The exact slides that you're seeing on your screen are part of the PDF. So 2 times you watch the video, listen to my explanations. From the 3rd, 4th, 5th time onwards, I want you to read the PDF as much as possible. I'm not going to ask you to learn anything, remember anything from the pre-scene. But I'm going to ask you to make it your favorite movie or your favorite book, which you read multiple times, go through multiple times, so you automatically remember the dialogues. You automatically remember what is what, where is what. Everything you'll remember on the top of your head automatically, but by just being in touch with it, by just reading it, by just going through it as many times as possible. That is the value of the pre-scene. Doing it once is of no value. So multiple times, 7, 8 times, you should have gone through the pre-scene, either video, either PDF, whatever works for you, till the date of your exam, because that is the backbone of this exam. The second thing is, when you are going through the pre-scene, pay careful attention and list down all of the topics that I speak of. If I speak of an E3 topic, list it. P3 topic, list it. I will give you all the prompts within my explanation, but you create your topic list. I'm going to give you my topic list as well when the time is right, but I want you to create your topic list when you are going through the pre-scene, which will confirm to you that I have understood the company well. This is only part 1. Let's start with it. So we are starting with the introduction now. Now the introduction is going to be very interesting because the company that's been given to us, or rather the structure of the company given to us, is very different. So we'll go through all the aspects one by one for you. In my pre-scene analysis, it's going to be a very unique approach because we are going to go through word by word of this pre-scene that CIMA has released. But what we'll do as an addition is we will highlight the keywords for you and we will explain them to you, obviously, while linking them to E3, P3 and F3. Specifically the most important topics of E3, P3 and F3, and which are often tested in the exam. That's one goal. The second goal is to give you so much information and so much knowledge about our company that when you write mock questions with me in your practice, or when you go to your final exam, you will have so much company knowledge with you, or you will have so much Cewmlator background with you that you will be able to start your answers in a much easier way. You'll be able to create your points in a much easier way, because trust me, in the strategic level, half your battle is won if you know your company well, and then you use it within your answers, within your practice, and then in your final exam. There is a very good chance that you will write a solid answer. But the place to start with is knowing our company. So this time around, as we have done in our industry analysis, if you haven't done my industry analysis, please go back and do it. It's a very good start to the pre-scene. So as we learned in our industry analysis, this time the industry that's been given to us is that of a company that manufactures electric vehicles, electric cars specifically. And the name of the company is Cewmlator. It's Cewmlator. You can call it Cewmlator, Cewmlator, whatever you want. I'm going to stick with, let's say, Cewmlator. And that is what I'll use throughout the pre-scene. At the end of the day, remember there are two goals of doing such a detailed pre-scene. One, linking and finding important E3, P3 and F3 topics. And two, registering this information so that you can use it when the time comes within our practice questions. We'll show you how to do that. And then further, you take it on and replicate it in the exam as well. Because the more information you showcase, the more knowledge you showcase about your company, within the answers that you present, the more your the more it showcases business skills, the more it showcases integration skills, and that is actually role playing. That is the role of a senior finance manager, because everything that a senior finance manager does is very much related to their company. You are a senior finance manager, so anything you suggest has to be related to your company. And to know your company, this detailed pre-scene analysis is all that you need. Let's start. Now, Cewmlator is a quoted company that manufactures electric cars. All of Cewmlator's products are powered by rechargeable batteries that are linked to electric motors. Straight away, a lot of important information about the company. You see that I have not just colored or highlighted random words. All the words that we highlight are actually meaningful. So Cewmlator is a quoted company, means it's listed on the stock exchange, and we are a manufacturer. We need to keep this in mind. And we produce completely battery operated vehicles, rechargeable batteries, which are linked to electric motors. So you are a senior manager in Cewmlator's finance function. You report directly to the board and advise on special projects and strategic matters. So your role is that of a senior manager. Now let's see, from these two paragraphs or two small paras, what link can we make? Now, being a quoted company very clearly means that you will need to follow strict corporate governance rules, corporate governance strategy structures. This is straight from your E3 and P3 syllabus. We'll be detailing about this deeper in the pre-scene, where they've given us the overall board structure. But over here it's important, so I've just pointed it out. So corporate governance becomes important. Now, one more thing I'd like to tell you is, while I'm making a discussion, I want you to create a solid topic list, so that by the end of my pre-scene, you will have a very summarized, let's say 50-60 topics, which are key, which you can then narrow in on, and you can only revise those topics to have a great start, where then you'll have revised the topics, you'll know the company in detail, and then students studying with us will do 25 mock questions on these topics. So you are going to be ultimately prepared for the exam. Whatever it throws at you, you'll know, because we'll give you that personalized marking, we'll give you that correction, we'll tell you what is right, wrong, we'll show you the direction. But make sure you list down the topic list. Those who are studying with us, you will receive my very well curated topic list for you. Don't worry about that. But it's just that I want you to create your list as well as an exercise. So you should be writing down: 1. Corporate governance. 2. Now, electrical cars show technology and environmental drivers of change, a very important thing in this market. Because we have gone through the industry analysis, we know there are a lot of external factors that will affect the manufacturing of electric cars. So an external market analysis, a deep external market analysis is going to be important, and models such as Pastel, Porter's 5 forces can be used for this. Now, we depend on rechargeable batteries. This is creating your operational risk, strategic risk. Why? Because what if there is a malfunction with the battery? What if there is a malfunction with your supply chain? So risk is coming into the picture. Topic number 3, you should write down types of risks. And also, because we are in the EV space, environmental, tech risks also come into the picture. Corporate social responsibility also coming into the picture, because you are inherently developing a product that is going to be environmentally friendly. More about this deeper, but overall, because it's a quoted company, corporate governance will have to be looked at, and shareholders will be very much scrutinizing your financial performance ratios, which is from F3. Your dividend ratio, your dividend policies, your different ROCE ratios, your different let's say interest cover, gross profit margin, all of these ratios become very important, because you are a listed company. People will evaluate this and they will judge you based on it. So F3 is also coming into the picture over here. You see, every aspect will be detailed like this for you, so you are not left thinking about anything. All the thinking has already been done by us. You only have to absorb. So from the first page, we are a listed company, and we are a company that engages in making battery operated cars, vehicles. Now, Cewmlator's head office is located in Duxland, a developed country that has an active and well-regulated stock exchange. Duxland's currency is the D dollars, and Duxland requires companies to prepare their financial statements in accordance with IFRS. Now, very clearly, firstly, you are a fictional company called Cewmlator. Secondly, you are located in a fictional country called Duxland. Now, Duxland is a developed country and it has a very well-regulated stock exchange. Now, well-regulated stock exchange again tells me that corporate governance rules are going to be key. IFRS is going to be key. So, because we are speaking about IFRS and there is so much importance given to GRI, global reporting, let's say your reporting standards, your link to IFRS is clearly shown over here. So your F3 understanding becomes even more important. If I look at governance, a developed market with regulated stock exchange reduces political and regulatory risk, but still there is compliance risk, there is reporting risk, because you need to stick to the corporate governance rules, policies, regulations. One very important aspect coming up over here is, because we are operating in Duxland in D dollars, if there is any transaction in a different currency, you are buying in a different currency, selling in a different currency, taking a loan in a different currency, anything in a different currency brings in your currency risk. And deeper into the pre-scene, we will learn that currency risk is a key topic which you will 100% be tested on in this exam. So I would note currency risk as a key issue. So in your topic list, next to currency risk, I would ask you to put a star, because I feel that it's going to be a very important issue. Obviously, we will do mock questions on it, so you are prepared. And then if it comes up in the exam, well and good, we are ready. Moving on, electric cars. So first was introduction, now to electric cars. Now within the pre-scene itself, they are giving you a little bit of the industry background before they actually start speaking about Cewmlator. But those who have done my industry analysis will have already great background with you even before you start this. So it's a good start for you. That's why we recommend the industry analysis. But nevertheless, we'll go through this. So origins are the late 19th century. Electric cars first commercially available at the end of 19th century. It's been in the market since a long time, but ceased production in 1920s due to technological advances in petrol-powered cars, which offered better performance and range. In the 20th century, dominance was of petrol-powered cars. Everybody like 10-15 years ago only had petrol-powered cars. Petrol-powered cars dominated for almost a century. Electric cars were largely ignored during this period. Now, electric vehicles in specific applications, electric electricity used for specialized vehicles, example forklift trucks in warehouses. The benefits were that it was efficient, no harmful emissions affecting workers. Now slowly in the 2000s, production restarted for electric cars with few manufacturers launching new models. So in the 19th century there were some electric cars. In the 20th century only petrol powered cars. Electricity was only used pretty much in specialized vehicles in factory godowns and warehouses. In the 2000s there was a return of electric cars. Some companies launched new models. Now if you look at the current market options, there are huge options available. Motorists can choose between internal combustion engines. Today if you go to buy a car, you can buy a petrol car or a diesel car, which is called ICE, internal combustion engine. You can buy an electric car, and under electric cars as well there are multiple options. You can buy purely electric, you can buy hybrid. Again, we have spoken about both in the industry analysis. Hybrid is where there is a combustion engine and there is an electric motor, both. Now, the growing interest in electric cars is mainly because of environmental concerns, and it's perceived as a cleaner alternative. And the most important thing about this industry is government action, because governments are committed to reducing emissions from road transport. Many planning legislations are going to ban sale of new ICE cars after a specific future date, which means there is going to be huge demand for electric cars, which we have learnt in depth in the industry analysis already. That's the value of doing my industry analysis. So overall, this was a very simple breakdown of the history of electric cars and what is available in today's modern world. Let's link. First, E3. The shift from petrol to electric cars is an external trigger for transformational change. So you as a company have to bank on, or rather is banking on, transformational change. That okay, people are now considering electric cars as a more viable option. So this is a positive for your industry. Now the government's plan to ban ICE cars link to pastel, which means there are huge repercussions for your market of political and environmental factors. Tomorrow government can say, okay, now hybrid cars also banned, only purely electric allowed. This can be a big issue for your company. So right now political risk is in your favor, but political risk can turn negative, environmental risk can turn negative for you. Next, so this is bringing in my risk aspect as well. Now electric vehicles represent disruptive innovation, creating a strategic risk for companies that fail to adapt from petrol to electronic technology. For your company, long-term uncertainty over new technologies and customer adoption requires scenario planning. Now for your company as well, let's say, like I said, tomorrow government can ban something new. So you can have a scenario planning structure in place where you have thought of multiple scenarios. So if the scenario occurs, you are ready. Scenario planning also I am going to consider as a key issue for this case study. So again, scenario planning, you should be putting a star. Now the growing EV market impacts financial and non-financial objectives both for you as a company. Remember, you will have financial growth because this market as altogether is growing, but you will have non-financial objectives or factors as well, which you will have to report, and which is becoming ever so increasingly important because of integrated reporting. IR, GRI from your F3 syllabus become very important. Again, this is going to be a key issue. I'll discuss all of these issues in multiple ways through the pre-scene, but as and when something comes up, I like to discuss it then and there itself. So we have types of electric cars now. they gave us, first we did the intro, then they gave us a little bit of the background of electric vehicles, the history. Now types of electric cars. Remember, all of this is only industry background that we are doing right now. We have not started to speak specifically about Cewmlator and Cewmlator's products and its operations and any of that. No. Let's start. Types of electric cars. Now there are several types of electric cars. Some manufacturers produce both ICE and EVs, and some only make EVs. For example, if you want ICE and EV, you can pick any company in the world today. Let's say Ford. They do normal cars plus they do EV cars. EV exclusively, you can think of Tesla, you can think of BYD. First, battery electric cars, or BEVs. I would like you to know these abbreviations because it's going to be important for you. In the exam, if they use, let's say, ICE, you should know what it means. If they use EV, you should know what it means. BEV, you should know what it means. HEV, which is going to come up, hybrid electric vehicles, you should know what it means. Because again, the pre-scene has been given to you very much in advance. We can't be wasting our time in the exam going to the pre-scene and searching for things. That's a criminal waste of time. You already have less time in the exam and we can't be wasting it on this. So knowing the pre-scene again is important because you can narrow down E3, P3, F3 topics. Secondly, you can gather this information and use it in your answers. And thirdly, you can save a lot of time in the exam which would have rather been spent wondering about things. You don't have to wonder in the exam. You should exactly know your company in its specifics. That is why this industry analysis is being given pre-scene analysis, is being given so much importance. Now, BEV cars are powered entirely by electricity. These cars have large batteries that are recharged by plugging them into an electrical source. BEV cars can be recharged at the driver's home using a domestic electrical socket or a home charging point. You can charge it anywhere or you can charge it at a public charging point as well. BEV cars produce no emissions when they are being driven. Their electric motors are completely quiet. Unfortunately, they are difficult to recover if they run out of charge when they are not at a recharging point. If the battery gets over, it stops there and there. This is because they cannot be towed and must be lifted onto a low loader or trailer and carried to the owner's home or a public charging point. Some drawbacks as well. Now, very clearly, the growth in BEVs increases the need for customer behavior analysis. As a company, you will have to make sure that you have a very strong customer external analysis. Because very clearly you want to know, are customers buying these cars? Is the perception changing about these cars? So an external market analysis becomes very important. Now, development of public and home charging infrastructure links to a value system and upstream supply chain management involving energy providers and charging equipment suppliers. It's going to be very important for you to have a good upstream supply chain, because let's say you give the car, but you don't have good charging infrastructure. You don't have a good charging pod. Let's say you buy a Tesla car. They give you the option to buy the supercharger, right? So just making the car is not enough. You need to make the complementary products as well. Overall, I'm seeing that significant investment decisions are going to be needed to fund charging infrastructure and battery technology. We already know that this industry is going to be heavy on let's say financing requirements, heavy on research and development. So your investment decisions, let's say debt, equity, weighted average cost of capital, dividend management, cash management, all of this becomes very important because of the nature of the industry, because you want to grow. For growth, you'll need to have new products, innovative products, and you'll have to better your charging infrastructure as well, because this is a completely consumer shift that you are looking at. A whole sect of customers, you are telling them that stop buying your ICE cars and buy electric cars. You have to convince them. So to convince them, you obviously have to give them everything in a good, presentable way. Next, we have plug-in hybrid. Now, plug-in hybrid cars are powered by a combination of both electricity and petrol or diesel, with the driver being able to choose between the power sources. The driver can choose, do you want to run on battery, do you want to run on petrol? They have smaller batteries than BEV cars, but because they also have fuel tanks. So this has pretty much the best of both worlds, let's put it that way. The batteries on PHEV cars are charged by plugging them into a recharge the same way. A PHEV may be able to manage 60 kilometers on its battery, which is sufficient for a daily commute, a city commute. And drivers may also reserve their battery power for any sections of their journey that involves city driving. You can choose whether you want to be on electric, whether you want to be on gas. PHEV cars can switch to their internal combustion engines if they run out of battery, and they can be refueled quickly. They usually have smaller fuel tanks than your standard ICE cars, which means they will have to be refueled frequently, but obviously they have best of both worlds. So you are compromising on something, you are gaining something. There is also a weight penalty associated with carrying both electric and ICE propulsion units. So the weight will also be higher, fuel consumption will also be higher, but you have the battery option. Now, PHEVs reflect a transitional stage in the automotive industry, driven by environmental concerns yet practical solutions. From the strategy point of view, PHEVs create strategic risks as manufacturers like us. See, we are thinking about all of this from the manufacturer's perspective like us. Must balance investing in this technology while preparing for the future, because future is going to be heavily dominated by BEVs. So this is a strategy risk we will have to be careful of. And again, investment coming to the picture. Investment, because if you invest too much in, let's say, PHEVs, tomorrow there is a huge shift to BEVs. Your money will go to waste, your investment will go to waste. So it becomes very important to make strong investment decisions or product decisions. Next category, after plug-in hybrids, we are going to only hybrids. Now, hybrid cars, only hybrid, HEV, use a petrol or diesel engine to generate electricity, which is used to keep the battery charged while the car is underway. So this you don't have to plug in. When the car is moving, the battery itself is charged by the power that the diesel or petrol engine generates. It generates electricity which is used to keep the battery charged. These cars cannot be plugged into external power sources. The batteries on HEV cars are too small to enable them to be driven for more than a few kilometers unless the internal combustion engine is running. So it's a very small battery, because this small battery is powered by the running of the internal combustion engine. Those internal combustion engines are used exclusively to generate this electricity by which the battery is charged. The HEV cars can be driven on petrol or diesel other than through the electrical power that they generate. They produce lower emissions than ICE cars because they use the fuel more efficiently. The fuel is running the car, that's powering the battery, so less fuel is being used because the car switches between using the battery, between using using the battery when it requires. So eventually it's using less fuel, leading to lower emissions. Now again, the development of hybrid represent a key industry change driver. You can see how this industry is changing with so many different products, so much new technology every day which is bringing which is coming up. So forecasting market trends, understanding the industry, understanding the external market becomes very important. Again, risk coming up to the picture over here at every stage, because HEVs present a strategic risk for Cewmlator because they offer consumers a lower emission option without requiring charging infrastructure. So overall, competing with companies that spread investment between HEVs and BEVs requires careful planning to ensure our resources are used well. So where are we putting our eggs? Are we only selling BEVs? Are we only selling, or are we selling a mixture of BEVs, PHEVs, HEVs? We need to look at that deeper into the pre-scene, because that will help us decide and define the company's forecasting, the company's competition. Because if you're only selling BEVs, then PHEVs and HEVs become your competition, although it's in the same industry. So an external market deep analysis is going to be an important consideration. Next, we have mild hybrids. Hybrid and then mild hybrid. So mild hybrid cars have an electric motor that is connected directly to a petrol or a diesel engine. The motor assists the internal combustion engine when the car is accelerating, boosting performance and saving fuel compared to an ICE car. So over here the engine is not charging the battery. That's what's happening in hybrid. Over here the cars have an electric motor which is directly connected. There's no charging aspect. There's no battery aspect. The motor assists the internal combustion engine where the car is accelerating, boosting performance. The motor assists the engine to turn over when the car is cruising at a steady speed, again using less fuel. The motor reverses and generates electricity when the car is slowing down. The electricity is used to charge the car's battery. Obviously, there is a battery aspect involved, but to a limited perspective, because the MHEV cars cannot run on the electric motors alone. In hybrids, they could run, but for a very small kilometer average. Over here, they cannot run on electric motors alone. They use electrical power to supplement the internal combustion engine. Most cars' brakes convert kinetic energy into heat energy, which causes them to slow down. When you brake, you're stopping your wheels from moving, which is generating heat. The electric motors in MHEVs convert much of the kinetic energy which is generated into electrical energy instead of heat, a process called regenerative braking. So whenever you slow down, whenever you are braking, this kinetic energy is converted to electrical energy rather than heat energy because of the system that has been set, because of the technology that these cars use, and this is called regenerative braking. This happens only in mild hybrids. That improves fuel efficiency slightly, but it is debatable whether MHEVs should be classified as electrical cars given they make very less use of electricity. But if you are a manufacturer of electric cars, your competition becomes mild hybrids, plug-in hybrids. All of this is your competition. So it's important to know about this. ICE cars, excluding MHEVs, accounted for 45% of new car registrations in Duxland, which means 55% went for electric cars. But 45 are still sticking to ICE. It doesn't include MHEVs. If MHEV are classified as ICE, then non-electric cars accounted for 61%. So eventually you can see that MHEVs are in the maturity stage of the automotive industry, offering only incremental improvements rather than a completely disruptive innovation, even though technology is new. The MHEVs are pretty much not on the verge of not being classified as EVs in itself, because they use very little the electric source. So why should we call it an EV? A pure BEV company like us Understanding where MHEVs sit in the life cycle helps in strategic planning. Because you know that these cars overall, the government is moving towards more and more electric support. So overall, these cars are going to reduce in sales eventually. So we can put them comfortably in the maturity stage. What is the maturity stage? What is the growth stage? That's there in your E3 syllabus. So in your topic list, you should have written down. Industry life cycle. Next, environmental links, obviously. So Cewmlator must consider CSR, GRI and IR reporting for positioning BEVs as the genuinely sustainable choice. Because remember, there are other options available in the market, but the genuinely sustainable choice is the BEVs, and you can promote market by having strong CSR, GRI and IR reporting. This is from your P3 syllabus. Next, the valuation of automotive businesses may vary depending on their portfolio. As a fully BEV manufacturer, Cewmlator's market valuation could be higher because eventually everybody is moving towards fully electric cars. Governments are supporting this. This is aligned with future growth. So our valuation, when I look at business valuation principles, the different methods of business valuation, ours will be higher because we are very much in link with that of today's modern environment. In the first page itself, they told us that we produce battery operated cars or battery electric operated vehicles. So we can assume over here or right now, as a fully BEV manufacturer, our valuation is going to be higher because we are a quoted company that will look better financially, we will look better, and eventually people will be willing to lend us, invest with us. That is a big perspective position of the company, right? Because it's positive for the company. That was F3. Now, if you look at the new cars which were registered in Duxland during 2024, you will see that a lot were ICE. So 1 million ICE cars were registered, just above 1 million. MHEVs were close to, let's say, just below 400,000, so let's say 350,000, roughly. BEVs were just above 400,000, so BEVs have already overtaken MHEVs. If I were to chronologically adjust them, first ICE, then BEV, then HEV, then MHEV, then HEV, and then comes PHEV at the end. So eventually we are sitting third in this graph. Now this data shows that ICE cars still dominate the market, while MHEVs and BEVs are in the mid-range. PHEVs and HEVs are smaller market share, but eventually as a company you are competing with all of them. This is clear implications for Cewmlator as Cewmlator, which is now a pure BEV company. We'll learn this deeper within the pre-scene, but I'm just bringing up references as and where I find them relevant for your understanding. Now this chart highlights market transition drivers, showing a clear but gradual shift from ICE to BEVs. For us, this is vital for forecasting demand and adjusting our strategy, because if government policies are changing, consumer preferences are changing, am I ready to serve them? Tomorrow I get a big order, am I ready to actually deliver it? So that's drivers of change which I need to be carefully aware of. Next, if Cewmlator plans future partnerships or acquisitions to expand production or charging infrastructure, understanding the current market mix is essential for valuing new opportunities and planning your financial strategies. If I am going to have new acquisitions, let's say I want to start making plug-in hybrids, I will need to buy maybe a company, or I will need to set up my own. Acquisition is obviously seen as a better option if the numbers fit right. But let's say I buy a company, then for buying that company, I will first have to do an external market analysis, then I will need to value that company, then I will need to plan the finance, all of which fits within the F3 syllabus and can come up as an exam scenario. Next, the shift away from ICE. Now, many governments, including Dachshunds, have set targets for a ban on the sale of new ICE cars after 2030. Very clearly, political risk is, or regulatory risk is, in your favor. That will not prevent the use of ICE cars purchased prior to the ban, nor will it prevent from buying used ICE cars on the second-hand market. ICE cars can still be used, but no new sales will happen. It has been expected that the prospect of a ban on ICE cars would encourage manufacturers to develop and promote EVs, perhaps ceasing production of ICE cars altogether long before 2030. That seems unlikely to happen because the demand for ICE cars remains high. More than 1 million units are still being purchased. And there is insufficient demand for EVs to bring out a more rapid switch. So government is trying their best, but still there is high demand for ICE cars. And people are still a little bit confused about shifting. Electrical cars raise issues that many motorists regard as serious disadvantage compared to ICE. The first disadvantage is the purchase price, because EVs are generally expensive compared to ICE. Manufacturers must recover their development costs. When you develop an EV, it's a very huge, big cost which needs to be recovered, and then you charge your customer more for that. That's why products are expensive. The cars themselves often require additional components like batteries, which are costly, and some forms of EV require both electrical motors and ICE as well. So this is adding to the cost. If it's a plug-in hybrid, or it's a hybrid, or it's a MHEV, you will require your internal combustion engines, increasing the cost. The price differential between EV and ICE cars has fallen, but still is significant. If we look at the graph, you will see that percentage by which EV price exceeds was close to 75% in 2020. In December 2024, it's come down and the difference is only 26%, but this 26%, let's say on a $50,000 car, or a $100,000 car, or a $20,000 car, is still significant. So it was 75%, it has come down to 26%, but it's still significant. So the chart shows the price gap between EVs and ICE narrowing from 75 to 26. This suggests EVs are becoming more affordable, but are still expensive. So from the pastel view, government's targets to ban ICE cars by 2030 are a political and environmental driver for change. For Cewmlator, understanding these external factors is vital for my strategic planning. Next, the narrowing gap between EVs and ICE introduce strategic risk. Cewmlator must plan long-term strategy to stay competitive, as competitors might delay the ICE phase out. So you still have to make sure you keep reducing your costs, reducing your prices. So even if the ICE phase out plan by 2030 doesn't happen, you are competitive, and scenario planning becomes crucial to prepare for uncertain adoption rates of EVs, especially with the 2030 ban approaching, which is like only 5 years away now. So scenario planning again coming to the picture. Now investors will factor in future cash flows and market share growth potential, which depend on how quickly EVs become mainstream. This will straightforward have an effect on your share price, your ability to raise funds for future R&D. So overall it depends on how you strategically position yourself and how prepared you are for the change. Now, before I move on, in the last slide, we have been speaking about the dividend decision or the investment decision. So from my topic list, I want to just quickly point this out. You'll see that the dividend policy has been highlighted as a key topic because it's highlighted in yellow. So what does the dividend policy do? From F3, it signals the financial health to shareholders. Dividends have a signaling effect. So the board must decide between reinvesting the dividend, paying a dividend to shareholders, balancing growth with shareholder expectations. As we move deeper into the pre-scene in my financial analysis aspect, we are going to see how much dividend we paid, what dividend has been paid, what is the policy of the company. But over here, I did find it important as a discussion, so I listed it down for you. And this way, all important topics are listed in the topic list. I hope you are making your topic list as well. Let's continue. So that was part 1. This is only the intro that we have done. This is only the start that we have done. But I want you to first understand part 1 very carefully. I want you to understand all the topics that we listed in part 1 very clearly. Refurbish, refinish your topic list. Have that strong topic list with you and make sure everything that I spoke about in part 1 along with the industry analysis you have set in your mind. You're comfortable with it. Then carefully we'll move on to part 2 and we'll start with the same process. But be very comfortable with part 1. Confirm your topic list, confirm your industry analysis knowledge, confirm your part 1 knowledge. After letting it sink in, then we will start with part 2. So welcome back. Firstly, in part number 1, I was very clear to mention that you should have first gone through the industry analysis, been very comfortable with it, then gone through part 1, been very comfortable with it, have a solid E3, P3 and F3 list of topics in front of you, have a solid understanding of whatever I have explained in part 1 from Cewmlator's perspective that I made the discussions. You just have to make sure that you made sense of those discussions. So in the last part number 1, we ended actually by starting the electric car market overview synopsis, where we learned that BEVs have the highest growth rate and they are they are one of the most fastest moving products in this market, followed by HEVs and then PHEVs. We related to E3, P3 and F3, and now we are moving on. It is hoped that demand will be stimulated over time because of reductions in production costs. For example, developments in the chemistry of EV battery packs are expected to increase the range of EVs and reduce the cost of making batteries. So overall, right now the major barrier for this market is cost. But the cost is going to go down as more and more production happens, as more and more research development happens, and things get cheaper. If you look at the biggest cost for a battery car is the battery pack. If you look at the battery pack chart that they have given us, we will see that the cost was per kilowatt hour 160, which is come down to 120 and which is further going to come down below 80, almost 70 in 2030, which is the projection, which means the battery pack price is going down, which means the price of the major input in your car, which is battery, is going to go down, and then eventually the price that you charge your customer will also go down. So most car manufacturers have a long history of making ICE cars. Some, including Cewmlator, have ceased production of ICE altogether and concentrating on EV because that is the large growth market. So over here, very clearly they're telling us that we have ceased production of ICE, stopped it, moved to EVs only. The global market for EVs is dominated by 3 companies. Globally, you are one of the companies that dominates this market. Atom, Dilson and Cewmlator. These 3 are global dominating companies in EVs. So if I want to buy an EV, I think of Atom, I think of Dilson and I think of Cewmlator. That's the position, the stature of your company. You are a large multinational. All three focus on EVs only. Atom and Cewmlator produce only BEVs. So we produce only battery electric cars. We don't do the plug-in hybrids. We don't do the the other hybrids, the normal hybrids. We don't do them. Dilson produces both BEV and PHEV, plug-in hybrid as well. Most of the smaller companies in the EV top 10 produce a range of different types of cars, including ICE, MHEV, as well as EVs. So if you look at the top 10 companies in the car market, they'll make a mixture of ICE, MHEV, and EV all. Some smaller companies manufacture only HEVs. So everybody has found their niche. Me as Cewmlator has also found my niche, and I am only making battery electric cars, and I am one of the leaders in the world. Remember this. So if I look at my percentage share of the EV market, Atom is leading at 16%, then comes Dilson, then comes Cewmlator. So there is very little separating the three leaders. And then there are a set of other leaders as well, which focus, other market leaders as well, but their share is very small compared to that of Atom, compared to that of Dilson, compared to that of Cewmlator. So we can comfortably say that Cewmlator, Atom and Dilson are going to have strong competition rivalry. So overall, I'm speaking about E3, competitive rivalry, because the EV market is highly concentrated with Cewmlator, Atom and Dilson holding 48% of the market share, which will create intense rivalry. Price competition or even research and development competition is going to be large in this market. You need to be aware of that. Now Cewmlator's BEV focus puts the BEV for us in the star quadrant if you think of the BCG matrix, because the BEV is a product which has high growth and it has high market share as well right now. So it's good that as a company Cewmlator is focusing on a star product which has a very bright future. This relates to BCG. If I'm looking at P3 now, with three companies dominating nearly half of the market, systemic risk arises. Systemic meaning, let's say an overall regulatory risk arises, because anything that happens in the world car market will affect you. For example, let's say there are some regulatory actions happening in X country. It's going to affect my competitive position. High interdependence means a major disruption to one player. Example, the Atom's battery cell could affect overall market confidence. People will think, oh, Atom's battery is not doing well. How is Cewmlator's battery doing well? Overall, the market will suffer because of such high dependence. This we call as external market systemic risk. Also, scenario planning again coming into the picture, but from the stress testing perspective, P3. So Cewmlator must plan for multiple futures. There is a price drop making BEVs mainstream by 2027. Second scenario can be that supply chain issues are causing a problem for you. Third, regulatory shifts such as tariffs or subsidies reshape the market. Any of these scenarios can come up. Any of these scenarios can affect you as a company. So scenario planning is going to be important. One important aspect from F3 is the valuation part. Now smaller players like Elcro or Goris could become acquisition targets for us. If we see, okay, Elcro is moving fast, we are one of the leaders, we'll have the money, we'll have the power. So can we not acquire Elcro? So valuation techniques like the DCF method or your net asset method, whatever method can be suggested to get into an acquisition or a merger or a partnership or a joint venture, whatever. But this is a situation that can come up because of the nature of our company, which is market leading, one of the top 3 in the world in making BEVs. Remember, we make only BEVs. Now, after all of this marathon or exercise that we did on the background market, see, first we started with the introduction, then we did a little bit of the background of electric cars, then we spoke about, the market trends in the electric car market, then we spoke about why electric cars are better than ICE cars, why people are still preferring ICE cars. After doing all of that background, we have now finally come to Cewmlator. So now we will finally start speaking about our company. Up until now was only background. Now specifically my company related problems, issues, E3, P3 and F3 links. Let's start first, company background. Established in 1952, initially manufacturing a range of internal combustion engines, listed on the stock exchange in 1968. So founded in 1952, in 16 years we got listed on the stock exchange. Now very clearly, first we need to be aware that we as a brand, as a company, has been in the market for almost 73 years, right? Because 2025 minus 1952. So 73 years is what we have been in the market for. Do you know any company in the whole wide world that has existed for 73 years and is not doing well? Obviously, you existed for 73 years because you have a very good brand image. You have a very good market image. People are liking your products. People are liking what you are selling. And that is why you have this market dominance as well. So we need to remember that we have goodwill, we have brand power because we have been in the market for 73 years. Again, remember, we are doing this pre-scene in so much detail because first, to understand the company, second, to pick E3, P3 and F3 topics, but third, I am always giving you ideas which you can keep with you. And then you can use it in my practice questions. For example, start your answer by saying, okay, Cewmlator has been in the market for 73 years, which showcases that we have good brand image, for example. If you include information from my discussions, from my pre-scene, within your practice questions or practice mocks that you'll do with me, we'll do lots of practice, 25 mock questions, most in the industry, most in the market, because we believe that is where the actual learning will happen. So we'll give you the chance to practice your learning from the pre-scene within the mock questions. We'll guide you on what is right, what is wrong. We'll mark you on it. And then when you take this experience to the final exam, trust me, your preparation is going to be completely different. But remember that you have to use it because you are a senior manager at Cewmlator. Anything you say, anything you speak has to be related to Cewmlator. Moving on, market position. Firstly, we focused on mid-market cars that balance attractive design with value for money. Built a reputation for innovation, introducing new technology in both car design and the manufacturing process. So our market position started with, firstly, focusing on mid-market cars, so mid-value. We already have a culture of innovation in design as well as in manufacturing. Remember this, you are already innovating from the start. Your cars are designed to be enjoyable, exciting to drive, while ensuring safety for drivers and passengers. Now the move into electric vehicles happened in 2012. An all-electric model with a range of 219 kilometers was introduced. By 2020, phase out of ICE cars internally, which means we stopped making and selling ICE cars. Now we produce only battery electric vehicles positioned as best in class for range from the mid-market. Remember, we have now transitioned to the best in class. You are not focusing on mid-market, mid-value. You are best in class for range, performance and value for money as well. So a good price, not cheap price, a good price because that's going to give you best in class range, best in class performance. That is what has become synonymous with Cewmlator since the last 5 years, where we introduced BEVs, or rather we phased out of ICE and completely focused on BEVs. That is why we are one of the market leaders in BEVs as well. Now, Cewmlator's early innovation track record highlights its core competency. Remember, your major core competency is innovation. Next, as Cewmlator phased out of ICE and scaled to BEVs, robust audit processes would have been essential to ensure stakeholders that safety and efficiency standards are being met. This can be true for a new scenario as well. Tomorrow they'll say that the market for plug-in hybrids is also growing very much. I want to start let's say plug-in hybrids, in one part of the world. So they'll tell you, okay, what audit processes do we need to focus on? So you'll tell them that from my P3 knowledge, we'll focus on the compliance audit, quality audit, environmental audit. All of this is stuff that we will check. So that's again an audit perspective coming up over here. Now, EVs depend on complex software systems. All of us know this. And EV is all about technology. When technology comes in, cyber security governance, cyber security risk, IT risk comes into the picture. IT risk, IT management, cyber security, fraud risk is a very big part of P3, and it's going to be tested in this exam. From F3, heavy BEV investment may limit dividend capacity. As you more and more invest in BEVs, research, development, it might not be possible to keep paying a dividend to shareholders. So different dividend policies will have to be considered at different life cycles in Cewmlator's life to make sure that we are retaining money when needed and paying back money to our shareholders to keep them happy as well. Because signaling effects are important. F3 syllabus. Now they have told us that we produce a range of cars. The first car that we produce is called the Cewmlator Tiny, as the name suggests, and as we go by the image, it's a small BEV designed for urban commuting. 2 passengers plus limited luggage, the range is 143. Then we have Cewmlator Trap, small BEV combining versatility and performance. Over here, 5 passengers plus a large boot. The rear seats fold as well to increase the boot space. It's sporty on open roads, yet compact. The range is 254. Next, we have Cewmlator Twists. This is a BEV SUV aimed at families. So we have a small car. We have let's say a hatchback, and then we have a SUV as well. 5 adults in comfort plus very large boot, folding rear seats, 375 kilometers per charge. And then last we have Cewmlator Scorch. This is our sports car. So 2 passengers plus boot space for a weekend luggage. It's a sports car, so 0 to 100 it reaches in 3 seconds, and the range is 400 kilometers. So now if I look at it, Tiny, which is an urban 2-seater, may be a question mark in your BCG matrix because you don't know if that's going to work, if people will like it. While Twists and Scorch are going to be your stars. Trap sits in the cash cow mid segment. Portfolio analysis will be very important to make sure that, okay, my product is important to me and that is why I am focusing on it. What is the life cycle of the product? Where each product is falling? Which are my major products? That's why I keep mentioning the BCG. Now I'm thinking of joint expansion in game theory. Now Cewmlator could consider acquiring a battery recycling firm or partnering with a local assembly plants in growth markets. So competitor reactions, if I do this, what will my competitor do? Must be anticipated, and this is game theory. So if you do something, what will your competitor do? Is your competitor going to match it, let it go, do his own thing? This was just an example. It could be anything. Okay, if I do this, it could be any scenario where they say, okay, you did this. What do you think is the analysis of this scenario from the game theory perspective? So your game theory knowledge from E3, P3 becomes very important over here. Moving on, again, one more aspect I want to speak about is systematic and unsystematic risk from F3. Now, premium models like Scotch lift margins and valuation multiples because obviously it's going to be premium priced because it's a sports car. While warranty exposure, battery degradation, introduces unsystematic risk. Any acquisition should use DCF with scenario adjusted cash flows. We need to remember this. When you're doing any acquisition, you're using a discounted cash flow method. You need to keep in mind scenarios. You need to keep in mind the industry that we are in, which is affected by a lot of unsystematic, which you can control, and systematic, which you cannot control, which is outside exposure, regulations and all of that, which will highly affect your business. Next, market position. Now, all models are highly competitive, they're telling us. Ranking in the top 3 for range within their market segment. Strong reputation for build quality and innovation. This is again my core competency. Coming to warranty. This is very important in the BEVs market because people are very concerned about the battery life. So warranty is a very important differentiator. Let's know this. The duration is 8 years or 160,000 kilometers. Covers the entire car including the battery. Any manufacturing defects corrected at Cewmlator's dealerships free of charge. If there is a manufacturing defect, we'll correct it for them free of charge. Replaced under warranty if range decreases by 20% or more within 8 years. If the range goes down by more than 20% within 8 years, you will change the battery or the car for that matter. Warranty valid only if the car is maintained and operated according to the owner's handbook. Now, warranty performance can be tracked as key performance indicators. What was the average repair cost per vehicle under warranty? What was the percentage of cars needing a battery replacement? Because this will clearly tell you, okay, where you need to focus on, because these are all costs for you, right? If a car comes back in with a manufacturing defect, it's a cost for you. If you have to change the battery, it's a cost for you. So KPIs will be key to make sure that we are serving customers well and we are in that same space reducing the cost for myself. Again, because these warranty costs is directly going to affect your profitability. These are costs, right? So they're affecting your margins, they're affecting your ROCE. Now, model variants. We'll go to trim levels. Each model is available in 3 trims. So we have 4 models: the Tiny, the Hatchback, Trap, Twix and Scorch. 4 models, 3 variants each, which means total roughly 12 products. 4 into 3, 12 products. 4 major models. Under each model we have 3 trims, where first is the base trim. So this is designed to be as affordable as possible, removing unnecessary features, because this is targeting cost conscious buyers. The features are fabric seats and thin carpets, no sound system in base, Tiny and Trap to conserve battery power. The most popular for Tiny since it's primarily intended for short journeys. So the base trim is most popular for Tiny, people who are cost conscious, extended range and only want to drive in the city. Second, we have the Lux trim. This provides a better quality trim and more features, like a satellite navigation system. For Trap and Twix, superior folding rear seats with 3 possible configurations. You can have 3 passengers, no boot space, 2 passengers, boot space, 1 passenger, boot space. Standard stuff. Base trim for Trap and Twix only allows the rear seat to fold as a single unit. The base only allows the rear seat to fold as a single unit. The Lux trim has different variations. 1 seat can fold, 2 seats can fold. This is most popular for Trap and Twix as customers prefer a balance of comfort and price. So those who are buying Trap and Twix are mainly going for the Lux trim. Then we have Grand Lux, highest level of luxury. Thick carpets, luxury seats, superior sound systems, all kind of cameras. Most Scotch models, which is your sports car, is sold in Grand Lux trims. Customers view it as a luxury sports car, and the buyers are prepared to pay a little more but get a premium product. So your Trap and Twix are mainly going for the Lux trim. Your Tiny, your cheapest, is going for the base trim, and Scotch majorly is selling under the Grand Lux trim because it's a premium product. Now, offering 3 trims allows us to pursue differentiation, allows us to pursue cost leadership as well. You can reduce the price as much as possible in your base trim, so a variety of customers can buy your products. Overall, every product carries brand reputation risk. If you do not deliver on the quality standards you have promised, the quality standards that you are advertising, then naturally it's not going to be good for your brand. Just popping in, make sure you're making your topic list. Don't forget about updating your topic list. I'm going to give you mine. Doesn't mean that you are just not focusing on the important topics. It becomes very important that you create your topic list as well, just for your reference, just so you are reconfirming your knowledge while you are doing the study with me. And then what to do of this topic list, I will tell you, because this will be important areas that we will first revise to get our understanding on point. Let's continue. Moving on, they're telling us that there are 6 Cewmlator factories. So you can imagine that we are a company who has 6 factories. This goes hand in hand with us being one of the world's leading EV manufacturers. So 2 factories are in Duxland, 1 in each of 4 different countries. Very clearly, even without thinking, your mind should straight away go to F3, currency risk, interest rate risk, currency risk management. All of those topics are coming to the fore now. I'll discuss them, but first, the Duxland Northern factory makes Twix cars. Duxland Central makes Scotch. Eastland makes only batteries. Remember, these batteries are going to be used in all cars. Farland makes only electric motors. So batteries and motors are going to be imported into Duxland to be fit in the Twix and Scotch cars. Again, these batteries and motors will also be imported into Vinland and Groveland, which are different countries altogether. And then from these factories, they'll be exported to all parts of the world where we are going to sell them. So much foreign exchange taking place. All of Cewmlator's cars are powered by lithium batteries. The company has a major factory in Eastland that produces the batteries for all of its cars. So all factories are going to be purchasing or receiving the batteries from the Eastland factory. Batteries for electric cars are large and heavy items that are designed and constructed to be built into the cars themselves. Each model of the car requires its own specific size and shape of battery. Mining and transporting lithium for batteries is a significant source of emissions associated with manufacturing EVs. The cars themselves are not polluting, but the process of making EVs is still highly, highly giving out emissions. Cewmlator's focus on BEVs means that its batteries are large, making it a major use of lithium and other metals used in batteries. So now very clearly we have from E3 perspective 6 factories across different parts of the world. So coordination and logistics is going to be very important, and you could have, or you should rather have, supply chain digital tools. So digitally, how are you managing all of this supply? The use of data, use of big data becomes important over here. Again, heavy lithium use makes us accountable for environmental and ethical sourcing. So our CSR, what are we doing to give back? What are we doing to maintain our reputation is important. This is your CSR, corporate social responsibility. Very important from P3 perspective is that the Eastland battery plant is a single point of failure. Tomorrow something goes wrong in that plant, you can't produce batteries. How are you going to fulfill the demand for your cars? Any disruption, like a strike, like political unrest, like a natural disaster, could halt all car production. The COSO ERM framework, Enterprise Resource Management Framework, calls for diversification or contingency planning. I'm bringing in your COSO ERM framework as well in this situation. Overall, again, your brand reputation risk is coming to the picture. Exchange rate risk coming to the picture. I've already gone deep into this, but some important considerations. Building a new regional battery plant may require a large capital expenditure. Any new plant, any new factory, any new decision is going to need capital expenditure, which will directly relate to your debt equity financing options. Another very important consideration, because we have different factories in different parts of the world, is transfer pricing. Generally, what large companies would do, for example, I'm saying, let's say that the tax rate is very high in Duxland. Let's say tax rate is 30% in Duxland. And in Duxland, we produce our Twixton Scotch cars. Batteries are coming from Eastland. But the whole company is one. Cewmlator is one. Under it, there are different factories, right? So let's say the price that we charge for the batteries, internally goods are being transferred. When goods are being transferred, naturally a price has to be charged. Transfer pricing comes into the picture. One factory is selling to another, right? You need to record it that way. You just can't send goods and it doesn't work that way. That's where transfer pricing comes in. A fair price has to be incorporated for every single good or service which is sold, even within a business, different subsidiaries, different group companies. So that needs to be recorded. So what large companies would do is, they would, and let's say the tax percentage in Eastland is 20%. So overall, Cewmlator wants to save tax. What can Cewmlator do? It will try to reduce its profit in Duxland as much as possible by showing that the battery price is $1,000, for example, whereas it should be only $500. But Cewmlator will say, no, I purchased it for $1,000. So your profit per car in Duxland which you sell will go down, whereas the profit for selling batteries in Eastland, you should have got only 500, but you got 1,000 for the battery factory, is higher. Overall, as a company, you would pay less tax because you moved your profit from a high tax country to a low tax country, which is Eastland in this example. This is what happens, and this is how transfer pricing works. So effective tax planning is vital to avoid disputes, to optimize your tax, after tax profits, let's put it that way. Overall, in this situation, we are a highly vertically integrated company. Batteries are coming from us, motors are coming from us, everything we are doing. We are not reliant on anybody, that is good. But this also makes for a case where there is a single point failure issue at our battery factory, then dealing with the whole situation will become a problem for Cewmlator. Next, Cewmlator's Farland factory produces all of the company's electric motors. We know that. Each model of car requires a motor that fits into the overall design and has sufficient power to achieve a satisfactory performance in relation to its size, weight, and class. So each model requires a bespoke battery, it requires a bespoke motor as well. Each model of car is manufactured at a factory that is configured to build a specific model. That factory can only make that model. It's built that way. The factories are highly automated, which is a common practice across the whole of the motor industry, especially with us, because our credentials are that of innovation. People know that we are innovative in our design as well as in our manufacturing. Particular care must be taken in designing and constructing electric cars because their bodies must be built around the batteries. The bodies need to be built around the batteries. Batteries cannot be removed from the cars once they have been built unless the car is completely dismantled. Rechargeable batteries can produce very high currents, which can cause electrical fires in the event of a short circuit. Very clearly, this is a reputation risk, a production risk, a health and safety risk which needs to be managed in our factories. You will see that overall there are so many risks that our company, because of the nature of industry that we are in, is exposed to. And that is why it is and that is why this is going to be an important risk management discussion, which I am repeatedly making through the pre-scene as well. In addition to the potential fire hazard, it is difficult to rectify any errors in production because obviously the battery is built into the body. You can't remove or change anything. Cewmlator's cars are sold through a worldwide network of 4,600 dealerships. These are independent businesses that are authorized to sell and maintain Cewmlator's cars. We are already very clear of the different distribution channels in our industry analysis. You can have your own stores, you can have agents, you can have dealerships. They're telling us, or we can sell online as well, but they're telling us that we sell through a worldwide network of dealerships. So maybe it's time to explore the online sales channel, because that is also growing. If you see Tesla, BYD, all of these big companies in the world are selling online. So maybe that's the next investment that the company makes, the next change that the company makes. Each dealership receives an allocation of cars and must maintain a satisfactory performance in terms of sales and customer feedback overall. Each dealership provides a showroom that has space, obviously, where it should be able to accommodate and demonstrate cars. The dealership also provides a team of sales advisors and a workshop for necessary maintenance. Now, an analysis of all that we spoke. Firstly, highly automated factories show the role of robotics, AI, Internet of Things, which is very good, very important. But maybe we can extend this by introducing data analytics, by having a strong customer relationship management system where we have digital platforms which can help us with predictive maintenance, which can help give alerts to customers, like an app for customers. So all of this becomes an option if we leverage the use of data. So that is what I see as one major gap which has not been mentioned up until now. So we'll keep this in mind that okay, we have all the best manufacturing systems, but in dealing with customers, are we actually using data analytics, big data? Are we selling online? Do we have a website? All of this from a data perspective is looking like a gap for me. Now, because so much of fire hazard and so much of electrical current hazard has been spoken of, we can keep in mind the CIMA risk management cycle over here, where we should first identify the risks, then we should assess the risks, then we should mitigate the risks, and then we should monitor the risks. This can be used as a model for dealing with any uncertainty or planning for any uncertainty when you know that your company inherently is going to be facing many risks and many issues because of the nature of the business that we are in. Strong, solid internal controls will be needed for your business. So your COSO model of internal controls is coming into the picture. If you don't have strong internal controls, every day something or the other will keep going wrong in your business because it's so large. So COSO model of internal control, very important to know. Overall, it's a very large company. All the manufacturing is done in-house, 6 different factories in different parts of the world, opening up a lot of horizons for them to ask you questions on. And we are dealing with all of those horizons one by one. And in my topic list as well, I will give you all of these topics, the use of these topics and the relation of these topics to Cewmlator. You don't have to worry about that. But this is just when I'm going through something with you, you should understand it. Pause this video and go back and watch it if you like. But we need to make sure that at least we are on par with my explanations. Next, we are moving to extracts from Cewmlator's annual report. So they're telling me that they've given you some extracts from our annual report, and first extract is our mission, vision and values. Now this is very important for you to remember and then use in your practice and then use in your final exam as well, because this is free integration marks. You can say that okay, our mission is to make the world a better place by providing sustainable motor vehicles. So okay, going ahead with this project will be relevant to my mission. You write that. The examiner knows that this person has studied the pre-scene. He will give you the credit for it. But this will come with practice, which we'll show you in our mock questions as well. But you need to be aware. So our mission is to make the world a better place by providing desirable, which means something that people want. So your design has to be good and it should be sustainable, which we are already doing. The vision is what I want to become in the future. Leading manufacturer of sustainable motor vehicles. Not only cars, they have said sustainable motor vehicles. So maybe tomorrow we launch an all-electric truck. That is possible. Or a big SUV, a large pickup truck. Because it's saying sustainable motor vehicles, leaving out options for expansion. And third, our values. So we are constantly innovating. We know this. We are committed to enhancing sustainability. We know this because obviously we are always innovative. We are looking at research development. We offer the highest quality in our products and we pay attention to the needs and the desires of our customers. So very clearly we need to make sure that these are important aspects for our consideration for our company. So our mission, our vision, our values need to be remembered. You cannot suggest or you cannot speak anything which is opposing these values. You need to suggest, you need to relate to these values only. Anything that you suggest, anything that you can't say that okay, let's stop innovating because it's very expensive, for example. That's not a justification. The justification has to be relevant to your values, vision, mission. So our mission and vision guide our strategic objectives. Stakeholder management becomes very important over here, because as a listed company, as a global company, you have to manage the board of directors, the people within the company, the people outside the company, the shareholders, the government, so many aspects. So stakeholder management is going to be very important for this particular market, this particular industry. And also because we are giving so much importance to sustainability, your GRI, integrated reporting, which especially relates or reports on your environmental performance, will become very important. So knowing what GRI is, knowing what IR is very important. They're not going to ask you to create the report, but they'll tell you that according to social capital or let's say environmental capital, how do I report this, for example. Then you'll tell them, okay, this is part of IR, this is how we'll take it forward, for example. So having that knowledge will be very important as a starting point. Now they have given us Cewmlator's board of director information. So information about people who are running the company. Now I don't want to make any extra intensive, analysis over here for this, but it's very important for us to know people who are running the company, because the people who are running the company will define the nature of the company, will define how the company is, what the strategy of the company is, how the company is moving forward. The overview outlook of the company is going to be decided by the board of directors. So now it becomes very important for us to know the people who are in charge. Now, as always, this is being done to understand the people who are running, link to E3, P3 and F3, but also board of directors is a very good chance for you to again get your integration marks, business skill marks. Know the expertise of every director and you will be able to use it in our practice questions, so it becomes your habit, and then you can use it in the final exam, which will 100% showcase good, solid integration skills. For example, you can say that our chief executive officer Ki Xiu has a expertise in chemistry, so she'll know what the best manufacturing techniques will be, for example, something like that. So knowing the skill of a director and then using it for reference when the time is right in mock questions for practice and then in the final exam is going to be very, very, very important. So now, Cewmlator's board of directors. First we have Sureen Pillai, non-executive chairman. He's the chairman. The roles of a CEO and chairman very clearly in P3 has been provided. The background is that he has a successful career in commercial law. His expertise is mergers and acquisitions, negotiations. His achievements are that he became partner at a leading Duxland law firm at a young age. Later was managing partner. He also served on boards of several charities, mostly focused on environmental issues. So his overall, I'll say, background is very much that which is linked to Cewmlator. Because we are going to be looking at mergers, acquisitions, he has an expertise. We are going to be looking at environmental issues and corporate social responsibility. He is on the charity board. We are, going to be having a lot of legal regulation issues. He has background in that. So good, qualified non-executive chairman is present. Next, we have Ki Xiu, Chief Executive Officer, BSc in Chemistry. First was a research assistant, then moved into industry roles and has worked in several manufacturing companies, including 5 years in lithium mining. So lithium is going to be one of our biggest inputs. So anybody who has knowledge about lithium mining and hence battery production is going to be very important for us, and this person is running our company. So naturally, this is a very important position to be in. And since 2006, Ki is part of this particular company. So been with the company for almost 20 years now, worked from the bottom to the top, knows all the ways the company functions, the ways the company works, which is very important for the CEO who is going to be running the day-to-day of the company. Next, we have Edwin Mitt, Operations Director. So Bachelor Operations means obviously looking at all of the factories, all the manufacturing. So Bachelor of Engineering, very important, plus Master of Engineering. Wide experience in manufacturing, including 6 years as Operations Director at a gearbox manufacturer for ICE cars. So still has a lot of experience in car manufacturing and working with Cewmlator since 2020. So Operations Director is also very well qualified, good industry background. Next we have Professor Anna Pohl, who is Research and Development Director. So doctorate in Aeronautical Engineering. Academic career was a lecturer, promoted to professor. Research focus is vehicle designed to minimize wind resistance and reduce fuel consumption, which in our case is reduce battery consumption. Recruited by major motor manufacturer in 2012, promoted to the board and joined Cewmlator in 2021 as R&D Director. You can see how much importance we are giving to R&D. We have a director representing R&D. So R&D becomes very, very important for our business. Next, we have Suhas Pathak, Finance Director. So education degree in economics. Career is trained in a car dealership group. Worked as assistant branch accountant. Promoted to senior finance manager. The career was joined in 2015 as group treasurer, then promoted to director. Also worked his way up, also has good background, also is well educated. Next, we have Stella Freeman, sales director. Diploma in marketing, started as a sales analyst, then became a senior salesperson, and then joined in 2020 to help develop online marketing. Remember, this is an important thing. See, up until now, I was saying that marketing has a gap, or rather, sorry, the online presence has a gap. Now they're telling us that at least we are online marketing, at least we are marketing online. They're not saying anything that we have a website or we're using IoT or we're using any kind of data or big data analytics, nothing. But still, we at least have online marketing presence. Next, we have Professor Salim Hegazi, Senior Independent Director now. Education is Electrical Engineering degree plus doctorate at Capital City University. Academic career, 15 years in teaching, promoted to professor. Remember, he is an independent director. But he has relevant electrical engineering background. 15 years teaching, served as a dean, chairs education committee of Duxland Institute of Electrical Engineers. So you can see how important he'll be to the Institute of Electrical Engineers. He can help us source the best talent to work with Cewmlator because of his position. So that's one advantage of having Professor Salim Hegazi as our independent director. Also, he has extensive knowledge on electrical engineering degrees. Electrical engineering because he holds a degree. Next, Professor Uzma, independent non-executive director. Again, career 20 years in print journalism, business editor, recipient of several prestigious awards, visiting professor of journalism. Now, why do we have somebody who is so well versed in journalism? Because it's very important for us to have a good public image because we are such a large global company. So, having the right kind of press, having the right kind of articles, having the right kind of, let's say, just information about the company going out in the right way is very important because of our situation, and having Professor Uzma helps us. Next, we have Stamatios, another independent non-executive director. He's a qualified lawyer, elected to Duxland's parliament, re-elected 5 times until defeat in 2021. Committee is he's focused on sustainability issues, chairs a major charity promoting sustainable business practices, and independent non-executive director since 2025 with us. So he has good, he will be able to help us with regulations because he has that government touch. He will be able to help us with good contacts because obviously these are aspects which need to be considered, need to be taken on board. Now overall we have, if you look at it, 3 independent non-executive directors plus a chairman. We have 1 CEO, 3 plus 1 on the non-executive side. On the executive side, we have 1 executive CEO, obviously. Then we have operations, then we have research and development, finance and sales. 4 plus 1. So 4 plus 1 on the executives, 3 plus 1 on the non-executives as it stands. I'm coming to the board bifurcation later on, but first let's just relate all of this information about our directors that we have understood to E3, P3 and F3. Let's just make a quick go around. Sureen, non-executive chairman, good background of law. Key, who is our executive officer, chief executive officer, background in chemistry, all manufacturing experience and also lithium experience mainly, worked from the bottom to the top. Edwin, operations, expert at operations, holds all kind of degrees. Then we have research and development director, who obviously only looking at research development shows how important innovation is. Finance director has good finance background, has worked in car dealership groups. Sales director obviously has good sales background and also started online marketing for us. We have Saleh Meghazi on the non-executive side, who has electrical engineering background and also chairs the committee for Duxland Institute of Electrical Engineers. Uzma, journalism background, and Stamatios, again, backgrounds with the government, so regulation help. Coming to E3 now. Now, independence is critical. NEDs from journalism, politics, and academics help ensure Cewmlator avoids groupthink, which means we have a different group of directors. So, independence will not be an issue because they are not reliant on each other. They have coming from different backgrounds, which is good. Next, directors' roles and strategic capability. We already know what the directors' roles are. I have just listed it over here for you. Overall, I also mentioned about Stamatios having ex-parliament, aspect. So his ability to manage regulators will be very important for us. So overall, I have spoken of all of this already when I was doing my explanations, but I always like to put it in this PDF as well, so that when you are reading by your own, by your own account, when you're reading after going through the video 2-3 times, when you're reading this by your own self, it will become much, much more easier for you to follow. So that brings me to the board responsibilities. Edwin looking at operations, everything under operations plus HR and health and safety under Edwin. Anna, everything related to research and development plus sustainability. Suhas, everything related to finance. And Stella, everything related to marketing along with dealership relations and customer service. So currently Cewmlator operates with a very clear functional structure led by the CEO at the top, and then 4 operations, 4 core functions. Each of these functions, different departments report to their directors, and the directors report to the chief executive officer. This structure provides clarity of roles, accountability, alignment of strategy, good clear direction. Everybody knows what they are responsible for. One thing I am seeing missing is a separate HR function Okay, HR just even has a mention under operations director, which means there is at least an HR department. But what I'm missing is a risk management director, because for our business, risk management is going to be very key, and there is no risk department. Nobody has been given the importance of risk. There is a risk committee. We will learn about that. But that's according to the corporate governance rules. We don't have board representation for risk or for IT. So this means that overall we have areas for improvement in terms of IT. If IT is being considered as important, if risk is being considered as important, obviously there would be a dedicated director for it. I don't see that, which means IT is not extensively being implemented within the company, which means risk is not being spoken about at the board level. So two things which I thought warrant a mention. And for this reason, the CEO must therefore ensure strong cross-functional coordination, particularly between R&D and sales, to make sure that R&D is happening but also your product is selling. Overall, that's the role of the Chief Executive Officer. Coming to the board committees. This is where you'll see that risk and CSR has representation, which is good, because according to corporate governance rules, this is required. So it's good that, okay, risk is at least being identified. Human resources at least being identified, because these are major aspects, but IT is still something which I consider as important for our company because of the nature that we have spoken about. So overall, let's look at each committee one by one. And everything that I have mentioned is written in this box below. So don't worry, you're not missing out on anything. But let's look at each committee. So audit committee, non-executive chairman plus 2 independent non-executive directors. 3 members total. Risk, again, non-executive chairman plus 2 independent non-executive directors. 3 members again. Remuneration, also 3 members. Nomination, also 3 members. Now, one very good thing, if I look at corporate governance, is that the first requirement rather is that the roles of the CEO and the chairman have to be different. We have a CEO, we have a chairman. That's good, so that there is no power consolidated with one person. Next, another thing I see from here is risk. It's not only written risk committee, it's risk and CSR, which showcases that we are committed to sustainability. We are committed to CSR. This is good, and this showcases my culture. You can mention this. Also, we have all committees present according to corporate governance rules. If I am being highly technical, corporate governance rule says for a big company like ours, you should have at least 3 members part of each committee. The chairman can be part of the committee, but he cannot be the chair, which means he cannot be the leader of that committee. So ideally, I would want to remove also the imbalance in the board, because there was 4+1 on the executive side and there was 3+1 on the non-executive side. So I would at least want one more non-executive director, and when that non-executive director is appointed, he should be part of the audit committee, of the risk committee, of the nominations committee. So there will be 4 total members, but 1 member will be the executive chairman. So in purely technical format, the best practice would be to have 1 more non-executive director to firstly balance the imbalance, because corporate governance says equal number of executives, equal number of non-executives. Currently we have 4+1 and 3+1. There is an imbalance. So 1 more non-executive director, and then when we appoint him, make him part of the audit committee, risk committee, nominations committee, so that chairman is part of it. That's okay. But overall, then there will become 3 independent directors, non-executive directors, with the chairman still being part, will be best practice. But this is just being overly critical. I saw this and I like to discuss it. That is why I have brought it up. Next, we have Cewmlator's principal risks. So we learnt about the people who are running the company. We learnt about the board structure. Now we are learning about risks. Now, very important that we at least have a risk committee. So at least because we have a risk committee, we will obviously have a risk register. Because we have the risk register, it's good that, okay, business is at least picking out the major risks. So it's not that we are completely in the aloof. We have risks picked out and we have mitigations for each risk also picked out. So the first risk is increased competition. This can happen in any industry. We have identified it. Rising competition, especially if ICE and hybrid manufacturers shift to BEVs. What are we doing for this? We are prioritizing R&D, product development and continuous innovation. So you can see that to mitigate this, our R&D head becomes very important. Innovative credentials. Second, shifting consumer preferences. Preferences may change depending on charging infrastructure. What are we doing? Working with regulators, which means government, and charging providers, stakeholders, to improve infrastructure. Promotes BEVs as the cleanest and most sustainable car technology. So we are already dealing with governments, regulators. So your stakeholder management becomes important here. Next, we have changing government policies. What is the impact of this? New sustainability and emissions policies may shift demand between ICE, hybrids and BEVs. Governments is becoming a very important role over here. Maintains close contact with government agencies to stay updated on policy changes and ensures decision makers understand economic and environmental proposals. This is unsystematic, systematic risk being discussed over here. Risks which are in your control, which are not in your control. This is not in your control to a large extent. Maybe you can control it in some parts of the world, but not in all parts, not in all factors. Next, economic factors. Again, you cannot control interest rates, employment rates, downturns in economies. So you monitor economic variables, you monitor your costs, and you highlight the benefits of BEV ownership. So this industry is being affected largely by factors which are out of your control, and these are the major factors which they are highlighting over here. Means at least these many risks are major risks for us. So competition, preferences, government policies, economic factors, supply chain vulnerability. Yes, you have a battery factory, but what if you're not getting lithium? Lithium stops. How are you going to make batteries? So we have strong and respectful relationships with suppliers to secure priority access. And we maintain inventory of critical materials and components so that if there is a shortage, we are saved. Which means the money is tied up in inventory. And last, currency movements. Global operations expose company to exchange rate fluctuations. We have a good treasury department and we have good, the board acts on passive and active currency risk management. This is sure short currency risk management question is going to come up, which we will practice in our mock questions as well. Now what I have done is I have made your life easy because I have taken each risk, increased competition, related it to E3, P3 and F3, external analysis obviously because 5 forces, innovative credentials. What do we try to do to this risk? Try to reduce it as much as possible by our ongoing R&D. This is the TARA risk management framework from E3 which I'm using. Next, shifting consumer preferences. This, you can relate to forecasting because you want to look into the future, you want to look at your reputation, and you want to try to accept or reduce this as much as possible. So preferences are unpredictable. Lobbying and strong branding reduce exposure, but you cannot remove it. At the end of the day, customer is the king. After that, we have changing government policies. You try to reduce this as much as possible because you already have people who have worked with the government, lawyers, part of your board of directors. So try to reduce this as much as possible. Economic factors, you have to pretty much accept. If the inflation rate changes, interest rate changes, you have to accept it. You can't do much about it except for forecasting, except for considering it as a business risk. Supply chain vulnerability, you're trying to transfer it as much as possible by having long-term contracts and having inventories. And last, currency movements, also you are trying to reduce or transfer by having strong currency management techniques in place. So overall, this was part 2 of my pre-scene analysis. Detailed operations have been gone through. You should have a solid topic list ready with you. You are going to get my topic list as well, but you should have your solid topic list ready as well. I will recommend go through part number 2 again. I'm sure there is a lot of discussion which you would have understood, but when you go through it the second time, you'll understand it much better. I can guarantee that for you. After that, we'll move to part 3, which is going to be the financials. Remember, this is only one resource. After this, we are going to make FinAI available to you. We'll give you our topic list. We'll make you write mock questions. We'll personally mark them. We'll meet you in live classes. Then you'll go for the exam. So you are going to be ready. For any questions, directly WhatsApp me, directly reach out to me, help@fintutors.com. You can email us. Anywhere, reach out to us so that we can help you out. Thank you. This was part 2. Now we're moving to part 3. Last part of this analysis, but a very crucial part. In part 1, we did introduction. In part introduction about the background, about the industry, about your role. In part 2, we did the details and the operations of the company. And in part 3, we are now moving to the financials of this company. See, every company is as strong as its numbers at the end of the day. Everything aside, if the numbers are not good, if the numbers are not supporting whatever the company is doing, then eventually it's going to not be, let's say, a hugely successful company. So now in this analysis, we are considering all the numbers and understanding the full background from the financial perspective for Cewmlator. As always, we will be making E3, P3 and F3 links along the way. But an important aspect is going to be for you to pay attention to my analysis so that, again, you are benefiting from knowing the numbers, linkages, you are getting ideas to include within your mock questions, and then you finally have so much practice that you can integrate, our financial analysis explanations within your answers, then showcase it in the final exam. So eventually, examiner is bound to give you your integration marks. So let's start with the financial analysis aspect. What we will do is first we will view the absolute numbers that CIMA has given us, the exact numbers that CIMA has provided, the exact financial statements CIMA has provided, and then I will show you my analysis on the same. So first the actual numbers discussed and then my analysis on the same will be discussed. So first we are starting with the statement of profit or loss. They've given us 2 years, 2024 and 2025. Important to note that the year ended is 30th of September, which means you were taking the November exam. So the year has just ended and 2 months of the new year, 25-26, have only just begun. Just something to keep in our mind. Now the revenue for 2025, 38.2 billion. You can see how big the company is, how large the company is, how huge the company is. From 31 billion to 38 billion, our revenue has gone up. So revenue went up by roughly 7 million, roughly I'm saying. If you look at cost of goods sold, you will see cost of goods from 25.5 became 28.9, which means roughly 4 million. Cost of goods went up by roughly 3 point something million, let's say 4 million, just for, I'll give you the accurate numbers, the accurate changes, everything is coming. But just for analysis, revenue went up by close to 7 million, cost of goods went up by almost 3 million. So overall, my revenue I was able to increase while controlling my costs, which showcases that the business has had good cost control, effective supply, and hence while we produced more units, we were able to control our costs. So the business is growing in terms of revenue, plus we have been able to control our costs. And because costs were controlled, our gross profit from 6.3 went up to 9.3. 3 billion increase in gross profit. Healthy. Your selling and admin costs pretty much from 1.1 billion became 1.2 billion. Remember over here, even a point difference is 1 million of increase. So from 1.1 it became 1.2, but nothing too alarming. Research cost was 2.2 billion and it became 2.5, which means further investment in further investment in research and development has taken place. Every year we are innovating so much that $2.5 billion is poured into research. And you already know research is very important because it has board representation, because our values are of innovation, because our culture is of research. So okay, research has increased. After all of this, our operating profit was still healthy at 5.6 billion, up from 3 billion. Finance costs from 1.5 became 1.6, which means your cost of finance went up. So maybe you took a new loan, that's why your interest cost went up, or you refinanced your old loan. Your old loan was ending, you want to refinance it. Last time your interest rate was 6%, now it became 7%. So finance costs will go up. Two reasons for this, and we will analyze this when we go to the statement of financial position as well. Don't worry. Now tax. From 0.3 billion it became 0.9. Again, two reasons. Tax, you paid more tax because you had more profit. Simple reason number one. Reason number two can be maybe this year, because you are a multinational, remember international transfer pricing, maybe this year there was more tax pay, the income was higher in high tax countries. That is why your tax expense went up compared to last year. Two reasons. Your operating profit has gone up, your profit after interest has gone up from 1.5 billion, big increase, to 4 billion, so 2.5 billion increase. Maybe that's why tax went up. Second reason can also be that a company unit in a high tax country showed a higher profit, so overall for the group tax expense went up. After all of this, your profit for the year is almost more than double than that of last year. From 1.2 billion it became 3.1 billion. So I can comfortably see that this year revenue has gone up, costs have been controlled. Overall, at the end, my profit for the year is still very healthy. So now to put it, these were my actual numbers. So company is in a strong position. But now to my analysis. See, what we do is we have calculated percentages for you. We have calculated very simple analysis percentages for you to make it very easy for you. So like I was saying, I have given you my analysis now, where I've created simple, easy percentage numbers for you. So you'll ask me, what is the point of this? Firstly, it helps you understand all of those absolute numbers that I spoke about much more clearly. Secondly, again, most important fact of this pre-scene is you use this information when we go to mock question writing, in our practice, and then in the final exam, because we are here to show integration skills, business skills. The more you speak about your company, the more you include about your company in your answers, the more marks you're going to get, especially in the SCS, because you are playing the role of a senior finance manager. So our revenue has gone up by 20%, very strong, whereas your admin and sales cost went up by only 9%. So your overall gross profit will show an increase, which we already know. Let's continue. Our research expense went up by 13%. But after all of this, my increase in operating profit was still 86%. You can see how strong the numbers are. Now, why am I mentioning all of this? Again, when you are writing anything about expansion, growth, about business opportunities, about our culture, you can start by saying, okay, our operating profit has gone up by close to 85%. This, and then go on writing whatever you have to write. This tells the examiner that, okay, this person has studied the pre-scene. This person has not come from the aloof and is not writing non-related answers. This person has clearly gone through the pre-scene, gone through the company information, so we'll give him credit for this. That is SCS. More about the company, everything you write related to the company. Finance costs have gone up by 6%, but after all of this, your profit before tax, healthy increase of 167%. You can see how fast the company is growing because revenue is increasing, costs are being controlled, investment in research, strong increase in profit. So shareholders are going to be happy, the company will look positive, and overall our margins are also increasing. You know, your profit after tax margin, your operating profit margin, all are significantly increasing. So this points towards a very strong company and very strong growth. That's my takeaway from the profit or loss statement, and everything that I spoke of is there in words in front of you, just to make sure that, you know, when you are reading it by yourself, you also have that experience of getting the chance to read through. But I've already explained everything. Next, we have Cewmlator Group's statement of changes in equity. Two things, or rather two reasons why they always give the statement of changes in equity. One is for you to see the dividend, and two is for you to see the currency gain or currency loss. Specifically in the SCS, these two reasons is why the statement of changes in equity is given. So we will narrow in on that. You will see that I made a profit of 3.1 billion, and from this I paid out 0.4 billion as my dividend. So 3.1 was my profit, only 0.4 was paid out. So currently my dividend payout ratio is 13% of the total profit, which means 87% is being invested or held back into the business. So now you'll say, okay, why is this 87% being held back? What are we doing with this? How are we funding the large research and development that we are doing every year? Our research and development cost is close to 2.5 billion. Where are we getting that money from? The profit that we make, some part is paid out to make the shareholders happy, but the other parts are invested, reinvested within the business so we can continue to grow. Your different dividend policies come into the picture over here, because over here we are following a very minimal dividend policy. I will say close to a zero dividend policy, because majority is being invested back into the business. So eventually the business grows, the share price grows, and everybody's happy. Minimal dividend being paid. Different dividend policies from F3 become very, very important to study. Secondly, we had a currency gain of 0.3 billion, indicating favorable foreign exchange movements. Now we already know we have a dedicated treasury department. What does this treasury department do? Obviously, looks at our foreign exchange, looks at the foreign exchange rates, hedging tools, where to hedge, how to hedge, where to borrow, how to borrow. All of that the treasury department is already looking at. And the treasury department has done a good job, because currency risk has been well handled and we have made a gain of 0.3 billion. But remember, this becomes a very important function for us. This year it's a gain, next year it can be a loss, which is an expense for me, which will hurt the business's bottom line. So we need to maintain strong hedging policies. Currency risk management, dividend question, currency risk management question, sure shot in the exam. Next, we go to the statement of financial position. Same like we did for the profit or loss, we'll do for the financial position, one by one each aspect. Then we'll look at my analysis. So we first have non-current assets, property, plant and equipment. First, we are looking at on the right hand side, on the asset side, the non-current assets from 25 billion have gone up to 27.5 billion. 2.5 billion increase in property, plant and equipment. So what is this increase? There can be two reasons again. One can be an upward revaluation of property, plant and equipment. Second can be simpler, that we purchased more property, plant and equipment in this year, continued our expansion. The goodwill has remained the same, 5.3, which means there was no amortization in goodwill, which means there was no reduction in depreciation in the value of goodwill. Secondly, we did not purchase any new companies in this year, because if you would have purchased, that becomes purchased goodwill and it would add to the value of goodwill over here. So no new acquisitions have taken place in this year. Other intangible assets from 6.3 has gone up to 7.4. So value of intangible assets increased, or new intangible assets were developed, like maybe a website or an app. It could be anything. So overall, on the asset side, non-current assets have increased. Current assets, inventory from 4.7 to 5.3. Now very clearly we know that we hold inventory of key stocks like lithium, like other metals, so that there is no issue if something is happening globally. From 4.7 it went up to 5.3. Trade receivables from 2.7 to 3.3 and bank from 3.1 to 3.7. Important for us to know that you are holding a strong bank balance of $3.7 billion. It's not small. It's a large cash balance that you hold, which you will be able to use to take advantage of, let's say buying some material, buying a company. If the prices are right, you have that flexibility. Important to know this. On the equity side, share capital has remained the same, so no new shares have been issued in this year. Currency reserve from 0.1 went up to 1.1 went up to 1.4. Why? Because there was a gain on your currency exchange. We saw it in the statement of changes in equity. Retained earnings went up. Why? Because a profit was made last year. So profit gets added in your retained earnings and only 13% was paid out as dividend. So retained earnings has gone up. Now borrowings from 18.5 has become 20. From 18 billion, it has become 20 billion. So very clearly this corresponds to the rise in finance costs. Why did the cost of finance go up? Obviously because a new loan was taken. Payables in the same zone, tax liability has increased, we already discussed that. And total equities and liability sides will match with the total assets, obviously. So eventually we are looking at a stable financial position with no real alarm bells, but some important ratios which I would like to consider. So they are saying, or rather looking at the numbers, we come to know that our return on capital employed, which means the amount of money that I invested plus the amount of money that I got back, is strong if anybody invests in Cewmlator. From 6%, it went up to 11%, which means any shareholder will be willing to invest in this company because it's giving strong returns. Profit is increasing, the asset base is not, the capital employed is not increasing. So eventually your return on capital employed is going to be positive, which we see over here. Non-current asset turnover, which means revenue upon non-current assets. How well your assets are being used to generate revenue. From 86 went up to 95 because non-current assets only small increase, but revenue huge increase. So you are using your assets very effectively as a company. Current ratio and quick ratio is also very strong. Very strong because overall show the company's liquidity. We maintain strong liquidity with a current ratio of 3.24 and a quick ratio of 1.84. Ideal measure is one part. Let me just go back to the statement. See, if you look at your current liabilities, they're coming up to 3.8. Your current assets are coming up to 12.3, which means ideally your current assets should be 2 times that of your current liabilities. So easily you can pay back current liabilities if the need be. Right now it's above 3 times. So your liquidity position is very strong, led by your bank being 3.7 billion balance. Your quick ratio, even if you remove the inventory, your liquidity is still very strong because it should be 1:1. It's comfortably above 2. It's almost double over here. So strong liquidity position of the company as well. A very important factor to consider in this exam is going to be gearing. You are already 42% geared, which has now become 41%. So eventually, what are we looking at? Your gearing is debt upon debt plus equity. So you will tell me that I took a loan. Now when you take a loan, ideally your gearing would increase, right? But over here it's debt upon debt plus equity. Over here equity has also increased. So even though you took a new loan, your gearing ratio remained in the same position. It remained 42, 41. It became 41%. Which means out of every $100 invested in your business, $60 is coming from equity, $40 is coming from debt. From our F3 syllabus, financing chapters, we very clearly know that debt is cheaper than equity because it is tax deductible, especially for such a global company like ours. But that is only to a certain extent. You can't have 80% debt and 90% debt, then you become a very risky company. So very clearly, we still have some debt capacity going up to 45, maybe 48%, maybe going up to 50% in worst cases. But 50-50, would be still risky, but we still have some debt capacity is what I would say. Why is this important for us to know? Because if you have a new project, let's say 100 million, 500 million, you can still consider debt because you have that debt capacity and you can suggest accordingly. In the exam they'll ask you what are the financing options available, then you can tell them that okay, my gearing currently is 41%, we still have some debt capacity, so if the project is worth 100 million, we can comfortably take that debt and move ahead because it is not going to be a major effect on our financial statements. But for that to happen, you will have to know that your current gearing is this much, how much more debt capacity do you have, the trade-off between debt and equity, all of this is there in F3. Different debt borrowing options, different equity options like having a rights issue, different short-term finance options, long-term finance options are favorite questions in the exam. This was my statement of financial position. Everything that I spoke has been mentioned over here in words for you to go through. Now, for the first time ever, they have included a sustainability report in the pre-scene itself. So they're telling us that Cewmlator, as part of their financials, is giving a sustainability report. What does this mean? Sustainability is very, very, very important for Cewmlator. We've seen this in our mission, in our vision, in our core values, all through the pre-scene. Sustainability is very important and it has board representation as well because we have a risk and CSR, even a social responsibility team already present. So sustainability is inherently very important for my business. First, governance structure. Now, Cewmlator demonstrates structured sustainability oversight with board level reporting at each meeting and a dedicated CSR committee. We already know this. This suggests sustainability is integrated into strategic decision making. Whenever you are suggesting anything for the company, whenever you are asked anything about the company, you need to remember that sustainability is integral for us. So start your recommendation by saying, since sustainability is very important for us, this is a direction that we can take. For example, when you include something like this showcases the examiner that okay, this student knows the pre-scene, knows your company. That is what senior finance managers do. Next, strategic focus. The company's sustainability strategy centers on community impact from manufacturing processes and product life cycle effects. This dual focus on operational and product sustainability aligns with their mission to make the world a better place through sustainable vehicles. However, the strategy appears somewhat narrow, potentially overlooking broader supply chain sustainability issues. So we are making sustainability aspects in our manufacturing, in our product life cycle effects, but because inherently as a business we need to mine for lithium, we need to purchase lithium, which is mined, other metals which are mined, we are affecting the market. We are aware of this and we are putting it out as well, but we have to try to make sure we are as sustainable as possible. Next, Cewmlator acknowledges a critical sustainability paradox. EV manufacturing generates higher emissions than ICE vehicle production, primarily due to battery manufacturing. We've already recorded this. This honest assessment is notable as many companies might downplay this inconvenient truth, but we are very honest about it. So you can see the integrity, CIMA code of ethics. You can see the integrity. The code of ethics are a very, very important aspect in this exam. So integrity, you can see within our business. Any ethics related question, the CIMA code of ethics can be used. The proactive engagement with governments on regulatory developments shows sophisticated risk management. There's also a risk though, because this could be viewed as lobbying to influence favorable regulations which can affect our overall reputation. There are some positive trends because CO2 emissions intensity decreased from 254 to 226 tons per $1 million revenue. 11% improvement in CO2 emissions. We are committed to this. Manufacturing waste intensity reduced from 32.4 to 30.6 tons per $1 million revenue. 6% improvement. Again, these metrics you can use. See, I'm never going to ask you to learn everything from the pre-scene. It's impossible. But I want you to keep going through the pre-scene multiple times. Keep going through it, keep reading it, keep it in front of you, keep watching it. That way, these numbers will stick in your mind. Okay, CO2 emissions was 11% improvement. This very clearly, include this in your answers. When we are when we are thinking about an overall improvement in the business, CO2 emissions are also improving by 11%, which is a good thing for us. Something like that, anything like that, one line over there showcases the pre-scene. So I'm not asking you to learn anything, I'm asking you to read through it multiple times. Read it as many times as you can. Like your favorite movie, like your favorite book. You'll remember the stuff automatically. There is one area of concern though, where they say that total electricity consumption surged from 8.4 to 12.8 million kilowatt hours, significantly outpacing the 20% revenue growth. This suggests declining energy efficiency. So very clearly your energy efficiency has declined. One area that you might need to invest in, might need to look at is energy consumption, electricity consumption, because your revenue went up by 20%, but electricity consumption going up by 52%. Very high for a company that has sustainability as its core value. This was our sustainability report and Cewmlator's financial analysis. Now they've given us a very interesting aspect where they've given us our competitors' financial statements. So we already know that we are one of the top 3 EV manufacturers in the world. Atom was at the top. So Atom is a direct competitor of Cewmlator. It has a slightly higher revenue and its products range consists of BEVs. Atom is also based in Duxland and it is quoted on the Duxlandian Stock Exchange, which means Cewmlator and Atom are pretty much the same. What is the difference? The difference is only the brand. For the customer, does he want to buy an Atom car? Does he want to buy a Cewmlator car? That's his decision. So they're pretty much the same. There is going to be intense competition between the two, remember, because both are vying for the same market share, for the same customer. They're in the same market, so there is going to be intense competition. And for Cewmlator, very, very clear game theory question, I think, can come up. So game theory becomes an important aspect to revise. So I've put the financials of both the companies side by side for us to have a look. We'll compare the 2025 numbers only. So our revenue has increased, but their revenue has also increased. My revenue went up by close to 7 billion. Theirs has gone up by 4 or 5 billion. So overall, they are a bigger company than me, but my revenue is increasing more. Their cost of goods sold also went up, mine also went up, but my gross profit and their gross profit turns out to be pretty much comparable because of my strong increase in revenue and me being able to control my costs. So my gross profit is 9.3, theirs is 9.6. Selling and admin for them also went up, for me also went up. Research for them also went up, me also went up, but they are spending 3.1 billion on research. We are spending 2.5. It's not that we don't have the money. Remember, we have a healthy profit, healthy cash balance, everything is healthy. but they have decided to invest more in research in this year, maybe because they are seeing that we are catching up, maybe because they are seeing that we are, we have a strong revenue increase, so maybe they are pumping more into research, and which should also mean that we should also be very clear in our research development plans, because Atom will come up with new products in the future. Our operating profit turns out to be greater than theirs in spite of their revenue being higher. Why? Because we were able to control the costs better and had a strong revenue increase. Finance cost for them also went up, so maybe they also took a new loan. Their tax expense also went up. But eventually my profit figures turn out to be much better than theirs, which we will see in my comparative analysis on your screen now. I'll just move myself to the side, because when we look at the comparative figures, so we looked at the absolute numbers. When we look at the comparative figures, you will see what I was saying. Our revenue went up by 20%, theirs by only 14%. Our admin selling costs both increased. Yes, but my revenue increase was strong. That is why my profit was also strong. Now, what if there can be a scenario where your revenue from 20% goes down to 15%? That means overall your profit will also take a hit. So that scenario can be tested. For us to maintain this healthy profit, maintaining a healthy revenue becomes very important. So new products, new marketing, new customer services, very important for my business. Finance costs for both went up. Eventually this led to a healthy increase in profit for both companies. See, they are also growing. Their profit before tax also went up by 138%, which is very, very high. And mine by 167. I am leading them. But they are also still growing, which showcases that the market for battery operated vehicles in itself is growing. My margins are better than theirs if you look at my operating margin, profit after tax margin. But overall, we can say that both the companies are very large. We are increasing at a faster rate compared to our major competitor in terms of revenue. In terms of profit as well, we have healthy profit numbers, which we can see over here. So if you want to speak of Atom as a competitor, here is my analysis for you to take in. Same way, we have the statement of changes in equity. If you look at Atom, they have also paid out only 12% of their dividend. We paid out 13%. Remember that. So which means that both companies, or maybe all major companies in this market, are reinvesting, holding back the funds so that they can reinvest in larger projects which are planned for maybe the future. You need to retain that money, right? Because this is a heavily research and development oriented market. So Atom is also maintaining a 12.5% dividend payout ratio, and they've also made a currency gain of 0.5 billion. So treasury is very important in this market, currency risk management very important in this market, and dividend also important to keep shareholders happy while retaining enough to keep investing in future growth. So maybe this 12-13% is industry average. If you reduce your dividend, what will be the signaling effect? Increase your dividend, what will be the signaling effect? This needs to be considered. Next, we have our comparative statement of financial position. Again, we'll compare the absolute numbers first. If you look at Atom, their asset base was higher than mine. Obviously, they're a bigger company than me, we know that. So their asset base was 33.2, mine was 27.5. Their goodwill also remained the same, and their intangible assets also went up. Inventory, trade receivables, bank, all pretty standard. What I'm seeing is that the bank figure for them also is 4.1 billion. So maybe both companies are on the lookout for new let's say market opportunities, acquisition opportunities, joint venture opportunities, any opportunity in the market, both companies will be ready to grab it because both have good, strong liquidity. If you look at the equity side, share capital is the same, retained earnings have gone up because of profit, borrowings have gone up because they've taken a new loan. Pretty standard. Nothing too alarming, rather than the fact that their asset base is larger than us, they're a bigger company than us, their revenue is bigger than us, but in terms of profit, we are higher. In terms of revenue, we are higher. Again, making it clear with this analysis now, comparative analysis. My ROCE is 11%. So if both were to, let's say, offer a new share issue, people will likely go with Cewmlator because they are going to get a higher return on their investment, which is a good sign, right? It's a comparative advantage. So ROCE is strong, non-current asset turnover is also strong for us, which means we are using our assets to generate revenue in a better way than theirs. They're also still very high. They're also still very, very positive, but ours is higher. Liquidity position for both is good, and gearing is also the same. Now see, everything about both companies is the same. Their products are the same, their market, both their financials are strong, their gearing is also strong. So there is going to be intense rivalry between the two. We need to be very clear of this fact because both are offering the same products to the same people and they're pretty much same in terms of the financials as well. So this becomes an important consideration, and this was the comparison. Now what I have done in my pre-scene analysis, just let me readjust it a little bit so that it's visible. What I have done on my pre-scene analysis is make it easier for you by, if you look at my PDF file, I have explained everything for you, but what we did was same like we did for Cewmlator. When you go through the reading, we brought the absolute number analysis for you first. Like took the financial statement, explained it. Then we got the comparative statement, explained it, which I've already gone through with you. And then we have provided a analysis which I've already explained, but I've put it in word form. So when you are reading it, it's good for you. It's understandable for you. It's followable for you. And you don't have to keep watching the video. Same way for the financial statement, and we have provided the analysis for you. So this was the comparative analysis. And with that, we come to the share price history. They've given us Cewmlator's share price. And you can see it is highly, highly volatile. Starts at $40, goes to 50, peaks to 100 and maybe 10, tanks again to, let's say, 50, then goes up, goes down, goes up, goes down, goes up, goes down. And as of now, it seems to be somewhere around 105. That's the analysis which we can make. So share price jumped from 35 to 100. This shows strong optimism about BEV growth in 2021. Very volatile, it has sharp increases, sharp decreases, and price stayed between 70 and 90. 23-24 fell further to 60 to 70. Possible reasons include maybe higher cost, more competition, weaker climate conditions. Last 2025, price recovered to about 9500, close to previous highs, shows renewed confidence in the company and the BEV sector, majorly because our financial statements would have gone out and they saw that okay, such good positive high numbers for the company, and that is why share price has rallied. Now when we are analyzing share prices, it becomes very important to remember the efficient market hypothesis. Is this a strong informative market? medium informative market, or always remember that eventually the share price will be affected by external factors. So the efficient market hypothesis from your F3 syllabus becomes important over here. So what is my interpretation? My interpretation is that this is a volatile company, but it's still promising because of its financials and because of the market that we are in. Because even after setbacks, the share price keeps bouncing back. It goes down, comes up. The investor signals are pretty much positive because there are new ongoing product innovations, strong sustainability image, we have a strong dealership network, we have strong financials. The negative overall for us, which we know, is reliance on lithium, your regulatory problems, global economic issues. All of this is pretty much keeping the share price in check. This is clearly relating to E3, P3 and F3, which I have already spoken of. Efficient market hypothesis, your currency risks, your economic risks, your supply chain risks, your competition analysis, stakeholder management. All of this we have covered. They've also told me that Cewmlator's beta is 0.56. Let's zoom in a little bit. They tell me that the beta factor is 0.56. What does this mean? F3 syllabus straight away. Systematic beta, unsystematic beta, what beta means, how beta is used, all of that is F3. CIMA says, or rather from your F3 syllabus, beta factor below 1 means it's inherently less risky. If it's above 1 means it's a very, very risky company. Equal to 1 means it moves with the market. If the market goes up, share price will go up. Market goes down, share price will go down. Over here, beta is 0.56, less than 1. So beta of 0.56 means the share price moves about half as much as the wider market. If the market rises or falls by 10%, Cewmlator's share price is expected to shift only 5.6. If the market falls 10%, your share price will fall only 5.6%, which means you are inherently a more stable company. If the market price goes up by 10%, you will go up by only 5.6%. This is the volatility that we are speaking of. Under CAPM, the low beta reduces Cewmlator's cost of equity because you are not considered as a very, very highly risky company. That lowers your overall WACC, making it easier to approve big investments like new factories, R&D. With lower systematic risk, lenders and investors are more comfortable with higher gearing, which means you further have more debt capacity because of your beta factor being low. Now, the low risk profile makes the stock more attractive to risk averse people because now we have become one of the top 3 in the world. We are already going to be a stable company with high increasing revenues because BEVs as a market is moving. So a stable or a progressive dividend would fit this profile well. I'm already giving you hints about your dividend policy over here. Now beta measures market risk only. Cewmlator still faces big business risks which we have already dealt with. In short, Cewmlator's low beta positions it as a defensive, low risk stock in a high volatility sector, giving it cheaper capital and stronger valuation, but it may struggle to attract high growth investors unless it signals upside through innovation expansion, which we are already focusing on because we have huge investments in research and development. But this is the overall takeaway from my beta factor being 0.56. Remember, this all will become 100% useless if you are not going to use this in your analysis, in your mock question writing with me, in your discussions in mock questions. Everything will become useless. You have to use this, and that is why so much detail has been provided to you. Last, we are on the news section. Now the news section I will not go into too much detail of, but I will go through it as a summary with you, because I will want you to read this at your own pace from my PDF, because all the analysis has already been done for you. But I just want to read it with you so that at least we are covering the summary together and picking out the major trends together. So the first article is in Happy Comic. The question is, where are the batteries in an electric car? So in BEVs, the battery is usually built into the floor under the seats, like you see in the image. It contains up to 100 cells in a sealed box, designed for safety because it operates at very high voltages. The sealed design hides the battery but prevents accidental handling and ensures safe charging and power supply. Very clearly, there is a risk that we are speaking about over here. Business risk, operations risk. If something were to go wrong, your reputation is going to be hit in a strong way. And I've spoken about this through my SWOT analysis. What is the threat, fire, or safety concerns could harm my reputation? Next, how do rechargeable batteries actually work? Let me zoom in a little bit. So the summary is that rechargeable batteries work by chemical reactions between the electrodes and electrolytes that can create electricity. Recharging reverses this reaction, restoring the battery's capacity. Again, how well your battery is manufactured, how well your battery recharges, how much less warranty claims come up is at the end of the day going to be your business's strength. So first was speaking about your risk. Second article was speaking about battery technology, which is ever advancing. Especially you have a battery factory as well. So is it true that EVs are faster than ICE cars? The next article. So some EVs are faster than ICE cars because electric motors deliver instant torque and rapid acceleration. Performance in both EVs and ICE cars is managed by softwares, which can be adjusted but may impact efficiency or range. So, overall, if I look at, this can be something which people are excited about. This can be something that you can market on. But the third article over here is all about EVs and the nature of EVs, of how they are developing softwares within the car, how they are developing hardware to push the car forward while maintaining their range, because for EVs range is very important. Next, the satellite navigation system in my mom's car warns her about problems such as traffic jams on the road ahead. How does her car know that the road is busy? So this article is all about Internet of Things, technology. So cars use smartphone or wireless connections to receive real-time updates and allow manufacturers to send software updates that improve efficiency. This requires constant communication with data centers. Now already we know that there is a gap in terms of data, gap in terms of technology at Cewmlator. So maybe it's time that because of this article, we have a better information technology system where we use information, use data to serve our customers in a better way. They've not mentioned anything about Cewmlator having a data center. So which very clearly means that if we were to go in this direction, then data security, data risk, cyber risk comes into the picture, but it's still a very important aspect which we should venture into. Next, we have what happens to old EVs. Are they recycled to make new ones? Very important, because recycling EVs is challenging compared to ICE cars, because EVs contain complex plastic and electronic waste. EV batteries are the largest issues, responsible for 45% of manufacturing emissions and hard to recycle. So okay, it might be sustainable as a car, but the inputs that go into manufacturing and the recycling aspect, the output, the car once it's useless, is not sustainable. So strong sustainability values position Cewmlator to lead, but recycling costs are going to be high. Negative publicity around this is going to affect the business overall. Let's just recap quickly. First article was about fire risk. Second article was about how recharging batteries actually work. So technology. Third one was also about technology, how we can serve our customers well. Fourth one was further about third one was speaking about the range, how EV's performance is better than ICE. Fourth one was about technology, how we can serve our customers better, and the data factor. And fifth one was also about sustainability. These 5 articles we have covered. I want you to carefully go through each article, then read my summary, then read my SWOT analysis. I have already done everything for you and explained everything to you, but when you go through it yourself, that's going to be a completely game changer. Next article is local governments reluctant to commit to the installation of public EV charging points. So local governments are hesitant. The high cost of robust public chargers, $60,000 per unit, slow adoption as many drivers lack access to home charging. This creates a barrier for people to buy BEVs. So very clearly, if you're not getting government support, if you don't have good regulation support, it's going to be an issue. So the opportunity is that maybe we can partner with the government. Maybe some part of that 60,000 you pay, the other part the government pays. Maybe a JV or joint venture we get into. So this article is showing me an aspect of expansion, government coordination, public-private partnership which can happen. Next, should you worry about battery degradation in your EV? We have already spoken about this in terms of warranty. So rechargeable batteries degrade over time, reducing range. Replacements can cost over $20,000, making EV ownership expensive once warranties expire. Manufacturers typically guarantee replacement if range drops by 30% within 8 years. Our warranty claims, remember from the pre-scene, was if range drops by 20% within 8 years, you will guarantee a replacement. But degradation beyond this period is a major concern for buyers. So battery degradation and what we are doing for technology, what we are doing for longer battery life in terms of research, development will be very, very important for this business. That's what this article is pointing towards. Next, where should you recharge your EV? Again, about chargers. So Duxland has 80,000 EV charging points, but they're fragmented across 12 operators with different apps, different accounts, different pricing, making it very, very confusing for the customer. And pricing also varies. So first good thing is there are 80,000 charging points. The weakness is that lack of direct control over charging infrastructure may frustrate customers. Again, there is a chance to potentially partner with charging providers to develop integrated charging payment app maybe. Now, at the end, I have already given you a lot of E3, P3 and F3 relevances when we went through it. But I have listed them down over here also for your reference, which you will read when you are coming to your final news analysis section. And that brings me to the end of this marathon pre-scene analysis. See, this is not a one-time game. It's not going to be possible for you to, once go through it and remember everything magically. Once, 2 times, watch the video. 3, 4, 5, 6, 7, 8 times, I will ask you to keep reading my PDF as many times as you can. If you have any questions, you can reach out to me. But when we begin with mock questions, eventually we will help you practice all important aspects. And in my live lessons as well, we will help you practice on all important aspects. That's all from me. Thank you.